So, China's economy continues to falter under the weight of structural weaknesses, policy missteps, and mounting global skepticism about its future. Data released in the past 10 days has painted somewhat of a bleak picture. The fixed asset investments fell by 5.2% year on year in July, the steepest decline outside of the COVID-19 pandemic. Retail sales were stagnant at 3.7%, the weakest pace since last year, while industrial output slowed to 5.7%, which is a new low for this year. Most strikingly, new bank lending contracted for the first time in 20 years. Even during COVID-19, lending did not shrink to the levels we've seen this year so far. And this is just showing that there is more cooling in demand for Chinese goods. It reflects a collapse of confidence in China's financial system as well. Now, demographics compound the problem. Real estate and consumer purchases like cars depend on younger buyers, but China's youth population is shrinking fast. The indicators point not just to a sputter, but to a structural decay as well. The property sector embodies this decline. Once considered untouchable, it now drags the entire economy down. Evergrande, once the world's largest real estate developer, became the largest bankruptcy in Earth's history just a few years ago, and it was something we were all talking about. Well, after years of restructuring attempts, it was just delisted from the Hong Kong Stock Exchange and will likely close for good. Evergrande's fall is both a symptom and a symbol of the property implosion that has gutted household wealth within China, while also devastating local government revenues and shattering the notion that housing is the foundation of China's middle class. For decades, property purchases and real estate drove about a quarter of China's GDP, but Beijing's over-reliance on it has now backfired. Deflation worsens the crisis. Overcapacity in solar panels, steel, and electric vehicles has sparked a race to the bottom as firms slash prices to stay alive. This has caused layoffs, and cost-cutting and quality are piling up, and Chinese products are now slipping in their global rankings. The result is a deflationary spiral, chronic imbalances between supply and demand that no policy tweak can fix. China keeps pushing supply onto the world, but the demand just isn't there. And this glut ends up dumped on discount platforms like Temu, Wish, and Shein. Price cuts deepen the spiral instead of easing it, exposing the limits of a model built on cheap exports and overbuilt real estate. At the policy level, the government's approach remains what I call the self-licking ice cream cone of economies. The Communist Party extracts huge sums from the population through taxes and debt, then pumps that money back into the system through state-led projects. Instead of letting free market forces drive innovation, trade, and investment, the CCP tries to engineer growth by force. But much of that money wants to leave the country anyway, in the form of capital flight to the United States or Europe. The sectors Beijing does prop up often overproduce, flooding the market with goods that Chinese consumers can't absorb and foreign consumers just don't want anymore in sufficient volume. It's an endless loop that deepens inefficiency rather than sparking growth. What is interesting is Beijing can fake its GDP growth and other numbers, but their stock market actually cannot. Take a look at how flat China is. It hasn't really moved up relative to other major stock markets across the world for the last few years. Now, the human toll here, because of all of this, is quite severe. China's entrepreneurial spirit, the foundation of job creation and innovation pretty much everywhere else, is being suffocated. Private firms face smothering regulation, restricted access to credit, and bans on all collaboration with foreign experts from countries, especially the United States and most European countries. In addition, without protections like the US-style LLCs or bankruptcy shields, business owners face personal liability that extends to their family assets. Bankruptcy in China now means ruin not just for the company, but for households. As a result, suicide rates among Chinese entrepreneurs is rising, and this is a grim indicator of how hostile the system has become to risk-taking. Instead of encouraging resilience here, the system now punishes failure and oppresses innovation. Internationally, these realities are eroding confidence in China's future. Investors are pulling back, seeing both weak economic fundamentals and political risk. Universities are severing ties over human rights abuses, further isolating China's research and development base. Rather than confront the root issues, Beijing focuses on optics and propaganda and maintaining an image over real reform. Admitting failure could weaken the party's grip, so the appearance of stability is prioritized. But this leaves Chinese leadership cornered. They can double down on the familiar tool of state-led investment, overcapacity, and central control, prolonging their rule, but also entrenching their economic decline. Or they can attempt true reform, unleash domestic consumption, reduce industrial gluts, protect entrepreneurs, and open space for private growth, all of which would be kind of hard to do in the near term, but in the long term would absolutely benefit a place like China. This, though, risks political upheaval, as loosening the system could undermine party dominance. For now, the signs all point clearly to the first option, where they are all just clinging to the old model. I guess old habits die hard. Now, the flaw here is a fundamental one. You can't government fund your way into sustainable growth. The Soviet Union proved that. China's collapse, though, when it comes, will be even larger than the Soviet Union's in scale. What once looked like an unstoppable economy, kind of like how the Soviet Union portrayed themselves, was always brittle. Structural decay, demographic decline, capital flight, and suffocated innovation are dragging China down, and Beijing seems unwilling or flat out unable to change course.